Welcome back, everybody. Really excited to be doing a panel today, on an area which I have to say is sort of hugely important to the gambling industry, hugely important to where things are going. I don't think we've really given enough oxygen to it in these settings before, certainly in the investNEXT track. So delighted to be joined by both of you today. To kick it off, it's worth saying Paysafe issued a detailed report on the payments landscape in gambling, all the way the players play. Absolutely excellent report. Perhaps to start off, Greg, could you talk a little bit about the report, why you did it, and what the sort of sources and methodology was behind it to sort of create it?
Sure, absolutely. So this is the second year, I believe, we put out the report, which has been, as you mentioned, well received across the industry and the community. And the reason, I guess, the raison that behind the report itself was to really create awareness in the market in general for the critical role that payments play in the overall ecosystem of online gaming, and how payment decisions are so critical from an operator perspective that help drive things like retention and player acquisition, because getting it right isn't as easy as some people might think. And Justin and I have been working together at different companies for over 10 years, and we've seen many groups come to us thinking, hey, payments is the last thing that we need to kind of wedge in there before we go live, and there's just a lack of awareness sometimes around how critical the role actually is. And we look at a multitude of different things. We've researched and surveyed customers in all major gaming markets around the world. So probably 3,000 to 5,000 here in the US and 6 major states, in Ontario and Canada and all across Europe. And ask them pointed questions around decisions they make as it relates to a sportsbook, how that has a direct correlation with payments. And if you look at things like payouts, right? We surveyed the market and say, what's the number one reason for selecting a sportsbook? Number one was, who can get me my money the quickest? Who provides the quickest and most seamless payout experience? And to me, that was surprising. You and I talked about this in the briefing. You look at things like odds and promotions, and you would think that's the number one decision why consumers choose a sportsbook, but it really has to do with payments. How quickly can I get my money in and out? How secure do I feel around the overall experience? How many deposit methods are there? If you think about it, payments, and if you're a new customer and you're acquired by a sportsbook, one of the first touch points that you have with that sportsbook or with any online operator is making your first deposit. And if that doesn't go well, that just leads to customer dissatisfaction. They might think it's the sportsbook. How come it works here, but it doesn't work there? The reality is, if those who get it right and make that seamless, it really can act as an acquisition and a retention tool for operators. So the report, again, I'm not going to get into it. It's 43 pages. We'll probably be up here for 45 minutes, but it really details out the player, why they choose a sportsbook, the reasons that lead to it, and how payments plays a critical role or as a direct correlation in customer satisfaction and retention.
Yeah. One of the things I was struck by in particular was the diversity of payment methods already in the US. I think there's kind of been a maybe slightly lazy or dated view that it's all about credit cards or that sort of domination. But actually, one of the things that the report draws out is actually the diversity. Can you sort of outline a little bit of kind of the range that US consumers are already using in the US? Sure.
Want me to start off?
Go ahead. Yeah. Sure.
Perfect. So it varies by vertical, but if you look at really regulated gaming in general, the cashier is very diverse, right? And the whole point of it, and I talk about, why payments play a critical role in acquisition and retention, is giving customers optionality, multiple ways to fund the wallet. We like to say that, hey, if you're on the cashier, there should be 100% acceptance rate, because there should be a payment method on there that is going to work for you, depending on if you're a casual consumer, if you're a VIP, if you're someone who wants to do something quick and seamless. Like, for example, what's the quickest way to get money into an account? Apple Pay, using a credit or a debit card, right? So it's just giving options to customers. Some drive acceptance better than others. I would say in the US, it's like Justin and I were talking about this outside. It's pretty synchronous across every state. You're going to see a lot of the same payment methods offered by operators today. It doesn't change state by state. The nuances that we see are more from a regulatory perspective. Some states have taken the decision to not allow their customers to fund their wallets using credit, so they only accept debit cards. In New York, for example, customers can only spend up to $2,500, I believe, annually on credit. So being able to survey that and make sure that customers are protected is the nuances that we see, but it's very different than in Europe. And if you go country to country, you see the localization of payment methods and how specific LPMs, as we call them, play a critical role in funding the wallet. In the US, it's pretty consistent state to state. It doesn't really change that much. And Justin, you want
Yeah, I mean, I think that's going to change a little bit. It's a pretty young market, right? We're only 5 years into sports betting. So yes, everybody threw everything in the cashier and said, hey, anything you want to use, fine, that's great. I think that we'll start seeing that the operators will see that, hey, this one works really well, this one works really well, this one we hardly ever get anybody in there, let's get that out of there. So it's going to be a continued evolution. And that part of that is localization, right? Because you see in other countries like Germany, UCash is a really big deal. It's clearly not a big deal in the U.S., right? It's very different. So I think there will continue to be evolution, and choosing the right payments partner makes a big difference, right? Are they evolving? Are they getting a better platform that's got a better user experience that can help you create retention versus just acquisition that it was for the first 5 years?
Yeah, I think that point about local payment methods is an interesting one because the report draws out. You mentioned New York. I think Massachusetts is another good example there. But what are the lessons we could maybe learn from Canada and looking at broader North America or the comparison? Or do you think ultimately it's going to be, are you saying, Justin, sort of more operator specific, that it works for them and their brand and their player set more than it's...
I think the consumer is going to drive it. That's who I think will actually ultimately do it, because ultimately when you go into a cashier, whether it's in a retail environment at Amazon, for example, or on a sports book, you choose how you want to pay, right? And the US is a very heavy card environment. People are very used to the reason for their debit cards or their credit cards, whether it be for rewards purposes, comfortability, things like that. I think that's who's going to drive it. There are going to always be some alternative payment options because someone maybe wants to only gamble a certain amount, so they're going to put a limit on it, for example, and I'm only going to use this fund, and that might be through ACH, for example, or whatever the case may be. So I do think it'll be consumer driven, but I think the operators are going to start noticing that more effectively than they did have the last 5 years.
Yeah, and I think in general, context is important. So if you look at Canada, which is much different than the US, I'm based in Canada, so I'm very in tune with the experience there from a customer perspective. You have local payment methods, for example, called the Interac e-Transfer, which is it's a nonprofit organization that ties all the banking institutions together across Canada. And although credit and debit card acceptance is high in regulated markets, if you look at the breakdown of the cashier, half of the customers, even if their credit and debit cards work, they use Interac because they're used to using it in their daily lives, right? And if you look at the market in general, Ontario is the first province to provide a regulated and licensed structure around online gaming. So historically, when you look at Canada, you have the provincial lotteries, and then you have operators that might not be based in Canada, that are targeting Canadian consumers. And when you target Canadian consumers and there's not a safe, regulated infrastructure to support and safeguard consumers, you have a lot of operators that are using payment providers or banks that might not be based locally, so the acceptance rates aren't as high. And Interac is one of those things that have always provided high acceptance for gray market operators across Canada. So now when you move to a regulated market, the consumer doesn't realize, or they're not aware that, hey, the operator is now offering banks and acquirers and credit card processing that is based here locally. So traditionally, when my Visa card wouldn't work when I would play in Ontario before it was regulated, now it will. So there's just an education process. Same thing in the US. You look at new states as they've opened up, you see debit card penetration higher in new states than maybe in more mature markets like New Jersey, because when New Jersey regulated, credit card and debit card penetration was very, very low. It took a very long time to educate the financial institutions, the banks, that this isn't offshore online gambling. This is safe, regulated. We worked along with the card brands to educate them and to provide new merchant category codes. So, you go look at a new state like Massachusetts, consumers' debit cards are working instantly and they're just sticking with that payment method. Then you go to New Jersey, most of those early consumers who have been with like one of their online providers for quite some time. Their debit cards never work, so they just think it doesn't work, right? So context there is important, and history in terms of driving like customer behavior in those jurisdictions.
That's great context. You mentioned it a little bit earlier, but it was even more specific. One of the things that, again, really stood out to me when I went through the report was about VIPs considerations. So seamless withdrawal of cash, more important, and this blew me away, more important than promotions, more important than brand, more important than good odds, which is not what I necessarily would have expected from first principles. So perhaps, Stanley, Justin, can you talk a little bit about what are the particular considerations around VIPs and VIP payments that makes that such an important factor for you?
Yeah, I think there's a couple of different things. One is oftentimes they have a host, right? So they've got a contact that's not just on their app, like they know somebody at the operator, DraftKings, FanDuel, whatever. They have a host team, right? So that's one thing. They're helping them coordinate, how do we get the funds in? Oftentimes wire. There's a problem on the weekends, right? The Fed Reserve's not open, you can't move funds that way, things like that. So I think companies, including ours, Greg's doing the same thing, and his company is trying to figure out how do we get that guy who's got a 11 a.m. game on NFL on a Sunday, how do we get those large amount of funds in? Can they do a credit card? Yeah, it costs the operator a lot of money, might be more than their limit on their card. It's possible that. So I do think that they behave differently, both from the way the operator looks at them, as well as how they get their funds into the ecosystem. So that's something that's becoming more and more prevalent because there's becoming more and more VIPs. I think a lot of VIPs were betting offshore for many, many years because there was no place to bet, right? So I think the operators are figuring out how to deal with it better, as well as we're partnering with those operators to say, here's how we can help you get funds in or out on a time when it's not a normal time of day or hour.
I guess that context point earlier, if the history is offshore as well, maybe that's part of the...
Sure.
Yeah, and our report speaks to that. Like payment security is at the top of the decision-making matrix for a customer when choosing a sportsbook. And context we talked about earlier, it matters because if you look at all these new states that are regulating OSB, traditionally, how would they bet on sports? They would either do it through a local bookie or they would bet offshore. And when you've had those experiences and you're not used to traditional everyday payment methods working and working seamlessly and then getting your money back a lot faster than what they can get in a regulated side, they just don't have that trust yet. So, when you look at consumers in the US, it's almost like, wow, I just did a withdrawal to my debit card or directly to my bank account and it's here instantly. Like I would never expect that. So building that trust from the payment side of things is just a novelty for like consumers or patrons that are in states that have just traditionally been gray markets or not gray, black markets. So it's creating that trust is huge. And listen, in general, VIPs, Justin touched on it, every player has different preferences and needs. Mm-hmm. If you're a casual consumer, which we would, someone who plays 1 to 2 times a week, or maybe they're only betting during NFL season, they're putting in $200, $300, $400 at a time, maybe even 50, even lower. So they just want something that works. Like it needs to work and it needs to be quick and easy and fast so you can get their attention, get their money in, and then just work on ways to create loyalty. For a VIP, much different set of challenges. These are customers that are betting 5 to 7 times a week that are betting large amounts of money. There's friction there. How much money can we get in a single deposit? Wire transfers have usually been big for whales, but like Justin said, hey, if you want to put $100,000 into your account over the weekend to bet on the NFL, how do you do that on Sunday when wires won't settle until Monday? So figuring out ways, working with providers who provide maybe warranty ACH solutions who take on that risk because they know the consumer's good. Like they have diligence docs on the consumer, they have source of funds, the operator has information on them. So working to close that gap, it's something that's evolving. It's something that the hosts are helping navigate those consumers through, but very different experience consumer by consumer. Some just want it to work, be quick and easy. Others want something a lot more customized.
And the VIPs are also used to, when they were offshore and things like that, they bet with credit, right? There aren't really markers yet in iGaming totally in the US, right? And that's a different experience because they didn't have to worry about getting funds in on Sunday morning because they just said, well, I've got a marker for $100,000, put 50 on it. That doesn't really exist very much in our space yet. Will it evolve to that? I kind of think it will, but again, it's going to keep changing. But I think that's another challenge with those VIPs. They were used to having access to funds without really having to, quote, do anything.
Yeah. And perhaps your answer informs the kind of player behavior side of things, because one of the things that's certainly been reflected by operators that have experience in the US and in Europe and elsewhere is US bettors withdraw and deposit with much greater frequency than bettors elsewhere do. Where typically you load your wallet, you bet, there's some left in there, and the call to action next time you bet is, oh, which account do I have money in? Oh, it's that one, I'll use that one. In the US, it seems like it's much more prevalent to do that sort of back and forward. So is that, do you think, ingrained from either the history or the kind of habits that have been formed by operators and using withdrawals as like a trust point and a proof point? Or is this something that's just a phase of where we are?
I think it's a little bit of both, and it comes back to that gray market, right? Because it used to be if we didn't have sportsbooks in the US, it was, some sportsbook offshore, and you would request a withdrawal, and it would be weeks, right? You never saw your money. You're like, am I ever going to see that money? So people got very uncomfortable with it, even when it was new and regulated. They were like, well, I just kind of want to test and see if I can get my money. And that's been the behavior. But we're a young industry, so I think you will see it move towards more of, hey, this is my preferred one or two operators. I'll leave my funds in there. I know I can get them. I can get them in an instant if I really want to. I think it will go that way. And I think that's kind of what we've talked about. I think it will go there.
Absolutely, and I think it's back to what I said before. Like, consumers are not used to getting their money that quick. So if you bet on DraftKings for the first time in Massachusetts, for example, and historically you haven't ever gambled in a safe, regulated environment outside of maybe a land-based casino, it almost feels like that wow factor. Like, how? Like, I can't believe I just got my money that quickly, because there's incredible payment infrastructure and tools out there today that help facilitate quick and easy deposits. So when you're not used to that, I think there's more churn because you're moving money in and out because you want that gratification of getting your funds back. Like, listen, I've dealt with that myself, like in being a Canadian, having gray market operators for years to bet on sports. It's before, like, until Interac evolved a little bit and gave you that confidence, because it's a product that you use in everyday life. I always said, hey, I'm depositing $500. It's for pure entertainment value. I'm never going to see my funds. It's so much friction to get money out. You're using these payment methods that you've never heard of before, and you don't exactly feel safe. You see a third-party financial institution in the middle that's responsible for moving the money, that you don't understand what affiliation it has with the brand that you're betting with. So it's one of those things, like, there's less money coming in and out. And in Europe, like you said, like, there's some markets, like in the UK, it's been around for a long time. These are known entities at this point. You've gone through the experience, so there's less churn. But I think in the US, that's exactly why you see it. It's just new in many markets, so people have that excitement or that gratification of seeing their funds come in and out quickly.
What are the differences you see from your seats when we look at other segments? So not OSB, not iGaming, but we spoke in the last session about sweepstakes or DFS or other kind of stuff. How does that differ? Because that seems like it's not quite on what we were just talking about.
Yeah. So the thing with the unregulated markets, what would you call them? Which is sweepstakes, daily fantasy. Well, maybe not daily fantasy, because you start to see legislation pass in some of the states, but it's one of those things where it's a better experience from a consumer perspective as it relates to payments, because without to bore everyone in the room, there are merchant category codes that Visa and MasterCard use to identify the businesses in which they're processing for. So for, like I talked about earlier, for online sports betting, it took a very long time to educate the financial institutions around this new merchant category code that was available for safe, regulated online gaming. So approval rates were very low on cards for a very long time. On the more traditional games of skill, video arcade style games, those approval rates are very high. So consumers who play at these sites, they use their credit and their debit card, and often it works, like 99.9% of the time. The issue that we have found is that when it comes to identifying the right providers, it's sometimes very difficult. Sometimes the operators don't have the same level of experience in online gaming. Payments, at a glance, is fairly commoditized. There's a lot of groups out there that can accept and process and credit and debit cards. It's very common in today. So identifying those who have experience, who understand how to navigate through potential regulatory roadblocks, because they do happen. We've experienced them in daily fantasy. We're experiencing them now in what we call daily fantasy plus. We see it in sweepstakes. Things are going to happen, and a lot of the providers out there that don't have experience in gaming, if things are great when things are going well, but when there's that unhappy path of, hey, Michigan decided to take a stance against a sweepstakes operator and everyone's leaving the space, often what we've seen over the years, that provider gets spooked altogether and they leave the space. So there's less barriers to entry from a payment provider perspective to facilitate payments in that space, whereas on the online gambling space, we have to be licensed or vendor registered. So there's only a handful of payment providers that go through the licensure process. But in that market, anyone can theoretically provide payment, so it's identifying the right partner. That's the biggest thing.
And I do think it almost got more difficult for those non-regulated gaming when regulated sports and iGaming came on board, because it used to be everybody was kind of on a level playing field, but now as long as it's easier for the card brands and the underwriters to look at it and say, oh, they're licensed, okay, we're good to go. Where these guys are doing legal opinions, things of that nature to prove that they're legal versus just, hey, the state licensed me, I'm good to go. I think that's been one of the evolutions that I didn't really anticipate when regulated gaming got going. I thought that would ease up for them because they'd say, well, we have regulated sports betting now. It's actually, I think, become more difficult to navigate, and thus goes back to having a partner like a Paysafe, a Pavilion, people who have the education to say, this is what you have to have and this is how you make it work. It's not easy to navigate. It never has been, and I don't think it will ever be. I don't think you will ever call it easy. It may get less complicated, but not by a lot. That's just my opinion.
Yeah, when Justin was at WorldPay Vantive back in the day, we remember all too well in 2015 when the AG of New York put out an opinion that daily fantasy sports was gambling, and I had colleagues who were subpoenaed in front of a federal court to testify because we were involved in the transaction flow. Not many companies, this isn't a subliminal sales pitch to work with Paysafe, but it's not many companies they would jump ship at that point. The juice is not worth the squeeze. And it's critical because things change very quickly. And you have to be prepared. Listen, there's a lot of great payments companies out there who have fantastic technology that will sell you the moon and the stars. But the reality is experience in this space is so critical. And being prepared to work alongside some of these challenges is something that you need to look for when identifying the right partner.
Yeah, I would say have the right platform, because if those changes come, like Michigan, we're out of sweepstakes, you need somebody who can turn the key right away to turn that off so that you don't get in violation with any sort of regulators, attorney generals, et cetera. Not all platforms are built the same, so it's something to be aware of. It's not just on the business side, but also the technical side is critically important to be able to be agile.
Aware we've not got a huge amount of time left, I'm about to introduce a word that you could probably talk about for a lot. Crypto, is there a place for it in the regulated OSB and iGaming space?
I think there's a space for it. I don't know when that's going to be. That's just my opinion. I listened to Joey Levy earlier, and he didn't have it prioritized, and they're pretty innovative, right? At Better, they're pretty innovative operator, have a lot of different looks at this space, but yeah, it's on their mind, but it didn't seem like it was prioritized on their roadmap. So I think there is a space for it, but I don't know exactly what that looks like.
Yeah, I listen, we've been talking about it for a long time. I just don't see a short-term path to it being accessible from a regulated online gambling perspective in the US. It's just, there's too much inherent risk. There's too much noise around the space. Unfortunately, we've seen some companies who we thought were unicorns that fell pretty quickly over the last couple of years and get in some trouble. And when you have a vertical that is so invested in things like AML and KYC and getting it right, and when you have a source of funds where you can't really track where those funds are coming from, and you see all the responsible gaming initiatives that are happening across the US, I just don't see it in the short term. If a state doesn't want to accept credit cards, then I can't see them accepting cryptocurrency yet. It's too hard to trace the source of funds. Yes, you can KYC the customer, but if they're moving money in through a crypto.com wallet, for example, you have no clue where those funds came from. They're too hard to trace. So I think eventually we'll see it with safeguards in place, but I personally just don't see it short term.
Same.
Both of you have worked in payments for a long time. One of the things that came up when we were discussing before is that the first 5 years of regulated gambling versus the last 5 years. So perhaps you could just sort of talk about the change you saw, the change you're seeing now, and then both of you can give your sort of thoughts of where the industry is going and what you expect to see in the next couple of years.
Yeah, I would say the first 5 years was a land grab. Everybody was trying to get live in every state that came on and get as many payments in there, do whatever they had to do to get that, and very focused on acquisition. Now it's switching to retention from an operator perspective and sort of streamlining the processes and things like that. I think there will be some disruptive things coming in, maybe the real-time payments of funding versus just going out. I think that will considerably change things. It seems like that's a bit of a moving target on the timing, but next 12 to 18 months when chargebacks are no longer an issue, how does that affect the MasterCards and Visas of the world? I don't know. Those types of things. So I think there's going to be some major changes, and there's really smart people in the world who are doing a lot of things with payments, and it will continue to affect gaming as well.
Yeah, like Justin said, the first 5 years, like especially prior to PASPA being repealed, you're hard pressed to find many customers who use a credit or debit card and it worked. I'm talking about traditional payment methods that US consumers are used to using in everyday life. The challenge was, hey, how do we build out the alternative payment structure? How do we work on recovery technology? How do we point them towards maybe a non-traditional payment method but works very well for online gaming? And a lot of that was education, and it was exhausting and taxing. But when you look now, because we're so far removed from that, and especially debit card approvals are at like 92% across the board. Traditional payment methods, how do I get money on quicker? I mentioned Apple Pay and Google Pay. Like to be able to look at my phone and do a Face ID to load my online gaming wallet is much different than what consumers had to go through in 2014 in New Jersey. We would laugh if we looked at the comparisons between the two, but I think it comes down to speed, like Justin said, the emergence of open banking and how we move money through online banking rails that might not go through traditional ACH rails that are more real time, that provide less risk for the operator and more instant for the consumer. I think we'll see that evolve as well. And then you see, Venmo's in the space today. Cash App is just sitting on the sidelines, and it's going to be a matter of months, I think, before they're in their space. So especially when you look at a younger demographic of customers that are used to using those types of P2P wallets, you'll just see it widespread, and the online gaming cashier will mimic what you see from a evolved checkout product for traditional e-com and retail. So I think that's where we're headed. I think right now it's all about optimization, and I think those are some of the trends that we'll see continue to develop over time, making things more instant and real time.
Fascinating. Please join me in thanking the panelists for their contributions.
Thanks.